marking a significant high in recent history. Despite this record surge, the host immediately introduces a key tension. The rally has not simplified the experience of holding or selling silver. On the contrary, it has exposed underlying structural challenges in the market, particularly regarding liquidity. The discussion frames the rally as a double-edged sword. While rising prices might suggest opportunity, the reality for individual holders is more complex. Many are discovering that selling physical silver is not straightforward, as the infrastructure and market mechanisms have not fully adapted to the heightened demand. This disconnect between price and practical accessibility sets the stage for the central theme of the video, navigating the difficulties of liquidating silver in a high-priced yet structurally constrained market. By opening with this contrast, the host establishes urgency and relevance. The audience is invited to consider not just the numerical value of silver, but the operational realities of ownership. This introduction positions the video as both an alert and a guide, signaling that even in a booming market, holders face tangible challenges that require strategy, knowledge, and careful decision-making. The host then delves into the problem with silver liquidity, emphasizing that despite the soaring price, many holders are encountering significant obstacles when trying to sell. Refineries are refusing certain silver products, while dealers are offering prices far below spot, sometimes as much as 30% lower. Even banks, traditionally seen as safe avenues for asset conversion, are largely unwilling to accept silver in retail form. This section highlights the disconnect between market value and real-world accessibility. Although the spot price signals record highs, individual holders often cannot convert their assets into cash at a fair rate. The host stresses that this is not a temporary inconvenience, but a structural challenge in the current silver market, where demand is high but practical liquidity is constrained. By framing liquidity as the central obstacle, the host prepares the audience to understand why certain types of silver are more desirable and easier to sell than others. The focus is on operational realities rather than price speculation, emphasizing that possession does not automatically translate into actionable value, even during a bull run. The host then breaks down different types of silver and their relative liquidity, providing a clear hierarchy for holders navigating the current market. At the top, American Silver Eagles are the most liquid, frequently bought at or slightly above spot price, though they come with a premium. Next are silver bars from major refiners, which remain accessible to most buyers and sellers. Moving down the liquidity scale, semi-numismatic or better bullion pieces offer higher premiums but are less easily sold, as their value depends on collector demand. Generic silver rounds and privately issued bars have lower premiums, making them less attractive to dealers during high demand periods. At the bottom of the liquidity spectrum, constitutional silver and silverware are the most difficult to liquidate in the current market, often requiring specialized buyers or significant effort. By clearly ranking these categories, the host provides practical guidance, helping viewers understand which holdings can be converted efficiently and which may pose challenges. This breakdown also illustrates how market structure affects the real-world value of silver beyond its spot price. Understanding these differences is essential for holders seeking to manage their stack strategically, particularly in a market where liquidity constraints can dramatically influence transactional outcomes. The host then discusses strategies for liquidating silver in the current challenging market. He emphasizes that selling now requires more skill and planning, as conventional avenues like refineries, banks, or local dealers may be unavailable or offer deeply discounted prices. One approach is peer-to-peer transactions, where buyers and sellers connect directly through platforms such as eBay or specialized auction sites like Whatnot. While these methods can provide access to buyers willing to pay fairer prices, they carry inherent risks, including potential scams, shipping concerns, and platform fees. The host stresses the importance of diligence, careful vetting of buyers, and understanding market demand when using these channels. This section reinforces the theme that liquidity is not automatic. It must be actively managed. Silver holders are advised to plan transactions in advance, identify reliable platforms, and recognize that immediate sales at spot value may not always be possible. By focusing on practical strategies, the host equips the audience with actionable steps to navigate a market that is profitable in theory but challenging in practice. The host then presents a product review of the Thug QT silver coin from Spectres, using it as an example of a collectible that illustrates the broader liquidity and value considerations discussed earlier. This 2-ounce coin features a distinctive silhouette target design, a reverse-proof finish, and comes with a certificate of authenticity. It is legal tender from Niue with a face value of $5, though its market value is tied to silver content and collectability. The host notes that, despite the rising silver price, Spectres has not significantly increased the coin's retail price, making it an attractive option for collectors rather than for immediate liquidation. He emphasizes that such collectible pieces are best purchased for enjoyment and long-term holding, rather than expecting quick resale at spot value. The review reinforces the distinction between silver as a tradable commodity and silver as a collectible or specialty item, highlighting how premiums, rarity, and demand influence liquidity. By examining this specific product, the host provides a practical illustration of the concepts discussed. Not all silver is equally liquid, and some purchases are best approached with a long-term perspective focused on holding and enjoyment rather than rapid sale. The host concludes by synthesizing the liquidity challenges, product considerations, and practical guidance for silver holders in the current market. He emphasizes that despite record high prices, converting silver into cash is not always straightforward. Factors such as product type, dealer behavior, and market demand significantly impact a holder's ability to liquidate efficiently. He reinforces that understanding the hierarchy of silver, ranging from highly liquid American silver eagles to illiquid silverware, is essential for managing a stack strategically. Coupled with informed use of peer-to-peer platforms or auctions, holders can navigate the market more effectively, minimizing potential losses and ensuring that their silver continues to serve its intended role as a tangible store of value. The host also reminds viewers that collectible pieces, such as the Thug QT silver coin, are best approached with long-term holding in mind. These items offer enjoyment and potential appreciation, but are not ideal for immediate liquidation. By combining awareness of liquidity, strategic planning, and careful selection of products, holders can maximize both the practical and intrinsic value of their silver stack. This final section ties together the themes of the video. Market highs bring both opportunity and challenge, and success in managing a silver stack requires knowledge, patience, and deliberate action.